Check, please.
Hey, welcome back to Everything Money. We are back again with a portfolio review. We're going to show what we're holding, some of the companies we like and why we like them. I am following the little book that beats the market, The Magic Formula Stocks by Joel Greenblatt. So I have a large percentage of my retirement in that. I have some outliers, Alibaba, HP, Intel, some gold, a lot of what Paul is buying, and Paul's going to reveal that right now. Go ahead, Paul. Tell me about your portfolio, what you're loving. Obviously, you have some Baba, but how much are we talking? How much of your percentage? Go for it, baby.
So let me just rattle off the stocks that I own. And keep in mind, guys, I don't ever watch these things. The only thing I watch in my portfolio are my options.
It was funny. You did say prior to this video, let me look these up because
I don't ever pay attention to where the stocks are because I buy based on a long-term outlook of the stock. So unless I hear something in the news, as I pay attention to the news and why the stock would be substantially worth less, I don't pay attention. I have Baba, Carnival Cruise Line, Farmers Bank, HPQ, Intel, Facebook, Miller Knoll, Sleep Number, Smith & Wesson, Steelcase, GDX, GDXJ, and Walgreens. And I also have a big short on the NASDAQ 100, which has worked out very well for me so far. But the reason I don't pay attention to stocks, I will repeat over and over. What do I care? If I bought these companies based on a 10-year outlook, what do I care besides some major news coming out telling me, Paul, you were wrong about this company? Bail now. Smith & Wesson just had a big decline because they missed their revenue targets, all these things. I went and looked at the company again. I heard about it. I went and looked at the company again, said, I still like it at this price.
That was your revisit. That was your reanalysis.
I'm like, I still like the company at this price. Even with their estimates on declining revenue, I was like, it's still selling for such a cheap price to me. And based on their balance sheet and other aspects, that I kept it. All the other companies are selling for a reasonable price based on what they currently have and what their future holds. I'm going to keep them. I want to add to them at some point. But the reason I look at my options is I sell covered calls. What that means is if I own a share of stock, I give somebody the right in the future to take it away from me at a certain price that's higher. Okay? I do that, but I get income for it. The reason I watch my options is because if a stock skyrockets like Alibaba has in the last week, it might affect my covered call. And I got to make sure I watch for that. Okay? Apart from that, I don't care. I keep track of the news of what's going on with the stocks. The great news is we have our Everything Money community, and pretty much everybody in there hears me talk about the stocks I own. And when something happens, I'll go, hey, Paul, did you see this? Oh, I didn't. Thank you for notifying me. Because they usually get to it before. I mean, last night I was in the kitchen eating a turkey sandwich, and I got a notification. Paul, they just announced 20 minutes ago, Alibaba is increasing their share buyback from 15 billion to 25 billion. Sure enough, I went to Google and it said 20 minutes ago. And I was like, guys, apart from me being attached to Twitter, I got this community right here just notifying me of everything.
I own very similar companies, GDX, GDXJ, Cisco, a lot of SPY, Intel, Jets, and Alibaba, of course, and only 110 shares of Alibaba, nothing to break the bank. But the concept, Paul, when you say, I don't care, this has taken me a long time, and I, too, often forget what I own, which sounds so stupid compared to what other people are seeing on YouTube.
I'll hear people all the time, like these business people and investors who try to act like they're trying to justify their existence. Oh, I know everything that's going on in my business portfolio. No, you don't. No, you don't. And if you have to know that, you paid too much. I want to pay stupidly low prices where if they miss a few, like Seth and Wesson, okay, they missed. Great.
Yeah, this is a concept that I think I've finally grabbed, and hopefully as a viewer, you can work toward if you're not there, is if I make minute by minute good decisions or make really great decisions in terms of investing, not flashy ones, not chasing. When you say I don't care, it's like, well, I've made that decision I'm very comfortable with, and it's a long-term play. I'm good.
That's what margin safety is all about.
Yeah.
I put margin safety in there. So, spoiler alert, I'm writing the book. And the book is about this. The book is about doing less work, but getting more stuff done. Don't fall into the trap of you have to be on top of everything at all times. That's all you're going to do is confuse yourself and get yourself scared. Look at day trading. Even with day trading, I have to force myself to put my trade in and ignore it until it hits my parameters and exit. Because if I keep watching it hit refresh, I will make a stupid decision.
Do less work.
Do less work. You'll probably get more stuff done. Because if you do less work but smarter, the whole work smarter, not harder, everybody says it and nobody believes it.
Paul, you have guided me to implement in my life so many things. I come to you with questions about taking positions, selling houses, potentially buying businesses, and even the day-to-day of clearing my inbox on a day-to-day, working on getting my chat messages down to having zero reds. But the concept, Paul, now is I'm 41, And it looks like to people on the outside, I don't even have a job at all.
Oh,
it almost
that's the joke amongst all my friends. Like, Paul's retired.
So I'm doing some might say the most work I've ever done, being a part of 3 businesses, owning 2 of them, and working with Everything Money on a day-to-day basis. And it looks like I have no job. It almost feels like I don't have a job.
I always tell people, I remember somebody I actually don't even like. He owns a couple of restaurants. I don't even like the guy, but I always defended him because people would say like, oh, that guy doesn't even work. I'm like, so he makes like 4 times what you make and you claim he doesn't work? Why are you criticizing him?
Yes.
He wakes up at 9. Why are you criticizing him? He wakes up at 9 every day and he makes 4 times more than what you make and you criticize him? I don't understand this. Like, this blows my mind. So when it comes to stocks, the same thing applies. If you find yourself always concerned, Gary Mashuris, the guy, I invested some money in him. And a few years ago, I said, hey, Gary, I want to look at options. He goes, hey, it's a great way to make some money on stock. He's like, the other thing is, if it keeps you busy, so you avoid making stupid mistakes in investing, go do it. Keep yourself distracted. I got in a discussion yesterday with one of our EM community members. They're like, Paul, if day trading is so profitable, why don't you do it with all your money? I'm like, well, for one reason, I'm not going to risk all my money in one thing. But the second reason is I do it partly to keep myself distracted from making other stupid decisions. I'll be less likely to go force myself to buy a stock I don't want to buy. If I have 8 ways, and people joke with me and say, Paul, you have 8 or 9 businesses? Yeah. And guess what now? If you came to me with a business, it better be effing amazing for me to go do it. Why? Because I have my times already taken.
Yeah.
So these are the part of the things about, well, don't look at your portfolio. My portfolio, I just rattled off for you. And I have options on every single one of those companies. And those are the ones I watch. So guys, our software here, watch any of our videos. This software is incredible. You get all of this in community, everything. I'll explain it to you shortly, but it's only a $1 per day. So guys, these are my stocks right here. I want you to focus on a few things. My last year's free cash flow on my companies was $82 billion. And they're currently worth $1.2 billion. By the way, I've made money in pretty much all these except for Alibaba. So I'm paying, 15 times free cash flow right now.
Is that good or bad?
That's good for what I consider to be very good companies. Okay? They've bought back 7.5% of their shares in the last 10 years. Very little dividend. Very, very little. But I'm okay with that. Dividends aren't important to me if they have good growth potential. Price to sales ratio of 2.25. For software being involved in this, very low. My PE of 16.5, my 5-year PE of 18.3, and an overall profit margin of 13.6. 5-year book value growth, 13%. I'm happy with this. This is what you can use this software for. It allows you to sit there and look at all of these companies, put them all together, and see how they look combined. Just like in Moneyball, they got 25 guys together, and they have to make the averages be a certain way. Same thing you do with your portfolio. Pick 20 or 30 companies that fit your criteria all together and make one big, beautiful company.
If you have questions for Paul, myself, or Mo, if you're in the community, you can obviously tag us and ask us in the chat. Paul, you're very much more open to our community members. So if you have questions about specific stocks and why Paul's in them, he can certainly answer them for you. That's our take. We'll keep you updated. As value investors, we actually like seeing this market go down. We know people are going to be hurt, but this is what we prepared for. So we're preparing ourselves for this sort of recession. So it's getting frothy out there, Paul, and I'm kind of liking it. It's just and you have trained me to be used to seeing my portfolio go down and be fine with it, which I am. And so
because you're 41, you don't need that money for another 25 or 30 years.
I'm at peace with it. So, yep. Subscribe, fondle thumbs up. See you next video. Thanks for watching.